Hello everyone, welcome into Above My Pay Grade. My name is Eric. Thanks for tuning in. If you're new here, came over from Financial Prepper, thanks for coming over. That couple is great. They've really supported me on this channel. So thanks for coming over. Thanks for subscribing. Really helps out the channel. Is housing going to crash? We'll look at some data. But I will say, if you Google pretty much anything on the internet, you'll find some supporting data to support your hypothesis. And just to prove my point, I just Googled something random. Do frogs cause cancer? And what did I find? Eating frog legs could cause cancer. And then I Googled, can frogs heal cancer? And what did I find? Frog skin could help treat cancer and other diseases. Okay, so no matter what, if you have a hypothesis and you want to support it, you can Google and find supporting data and convince yourself that you're right. And I always want to be aware of that. But one of the things I like to dumb things down to is supply and demand. Supply and demand, right? Demand is falling through the floor for a lot of reasons. One of them is no one can afford a house. The interest rates have gone up, right? And a $500,000 house, that same house today costs twice as much if they keep the same price as far as servicing cost per month. And that's really what people are worried about. How much does it cost per month, right? Same thing with car payments. So we're going to look at some graphs here, and then you can make up your own mind. I'll kind of tell you my base case. So one of the stats here, according to Redfin, the number of homes sold in the United States during September dropped by 25% year over year, which is wild. Year over year drop of 25%. And it's not really that it's changed, it's the rate of change that is absolutely astronomical. And just that data alone doesn't really tell you much unless you realize why. And why is that? Because people are trying to get 2021 prices for 2022 interest rates. And no one's buying, right? Another statistic here, number 2, new housing starts in the United States, meaning new home builds, fell by 8.1% in September. And these massive home builders like Lennar, if they could make money, if they could sell their homes, they would keep bringing more homes on the market, right? And so if they could sell the current stock of homes that they had, they'd keep building. And they can't sell. So new home builds are going down. But that is a decrease in supply, is it not? So decrease in demand, decrease in supply, everything being equal, prices wouldn't go down, right? More on that here in a second. The third factor to look at, the number of buyers touring new single-family homes has fallen to a depressingly low level. Traffic of prospective buyers of new single-family houses plunged to the lowest level since 2012. And if you were around in the real estate market back then, you realize 2012 was about the bottom of our national housing crash from the GFC, and then it started going up from 2012. And yes, real estate is somewhat regional, but what isn't regional is interest rates. So this is affecting the whole United States, obviously. So lowest level since 2012, obviously not a good sign, but again, supply and demand. Where's the supply going to come from? More on that here in a second. Home builder confidence has dropped, this is number 4, for 10 consecutive months. The overall confidence of home builders in single-family houses fell for 10 months in a row. This is kind of basically taking home builders, they're seeing all the data. They're seeing the demand, they're seeing the cost of building, labor, all the things that go into building homes. And they kind of have a big picture. And if their confidence goes down, it's an informed confidence, I guess is what I'm trying to say. And here's one that's really important, okay, number 5. Demand for mortgages has plummeted to the lowest level that we have seen in 25 years. Mortgage demand, which has suffered 4 straight months of decline, fell last week to the lowest level since 1997. And it's not always the change, it's the rate of change, okay? And if you look at this graph, it's just off a cliff. And the way it went up, too, was kind of the same trajectory, up and to the right, and then down and to the right. So all bad news, right? If you're looking at home prices, you're like, oh my word, who's going to be able to afford this? And it does take time to change because, again, people are trying to get 2021 prices for 2022 interest rates, which ain't going to happen. But I wanted to throw a couple wild cards here, something to think about. Again, back to supply and demand. All right? If all things are equal and demand drops and supply drops, one might think that housing prices might not drop drastically, might drop 10%, but 50% that people are predicting, probably not going to happen. One thing that's very different today than in 2008 is the short-term rental business. And if you think about what people cut out during a recession, they cut out luxury first, things they don't need. And what do you not need? Travel, right? People don't need it. And so Airbnb rentals, a lot of these people have 3, 4, 5, 6 mortgages on Airbnbs, and all is well and good if demand stays high. But anecdotally, I look on Airbnb and you look and you try to rent something, and the price, and then it has a line through it, and then it has a lower price, meaning the demand isn't there, so they're lowering the prices to get people in the door. How long can these people who have multiple mortgages on multiple Airbnbs stay afloat if demand drops off a cliff? People prioritize food and their own housing over Airbnb. So I do think you're going to see a lot of supply come online from this short-term rental boom that you saw in 2020 and 2021. It's a very oversaturated market. You can rent 8 different homes on the same block, and you're like, okay, how many people want to stay here? And then again, anecdotally, I look in my neighborhood, 2021, saw a sign go up, home for sale, next day under contract. Now I'm seeing those same signs up for months at a time. Okay, so but the supply, the influx of supply, I think is going to come from these short-term rentals and Airbnbs. But again, don't rule out the wild card of the government doing something insanely stupid. Okay, so you see the trend with student loans, and you're like, this isn't going to last. And then the government comes in and says, we're going to pay off part of your student loans. Do I think they'll do the same thing with housing? No, but what they could do in a way to make it more affordable is extend out the loan maturity date, meaning 40, 50-year loans, mortgages. That's right. They're like, hey, we can't lower the price of the homes because of inflation, but we can extend out the period that you can take on the loan, therefore lowering the monthly cost of servicing that loan. Which, what do you think is going to happen? You don't have to be a rocket scientist to know the price is going to go up. Because if the monthly servicing cost goes down, prices go up. And that's what happened in 2020 and 2021. And again, government's short-sighted. Does it get me more votes? I vote. That's what they vote for. It's absolutely unbelievable. And I laugh because it is so insanely stupid. But I've seen things the last couple of months that I'm like, okay, so gas prices are going up. You got to increase supply to lower the price, but they're increasing supply of money instead of increasing supply of gas. And so I'm like, oh, if they did that, what wouldn't they do in the housing market? So it's funny because it is. If you don't laugh, you'll be in the depths of despair ultimately. And the other thing I'll say, I think, and I'll do a video on this later, I think ultimately the Fed's going to have to pivot. And they will have to admit defeat to inflation. It won't sound like that, but what they'll say is our new target is something higher than 2%. What will that be? 5, 10, 15? I don't know. But they are causing the markets to break. And the big market that I think will have to pivot on is government debt. If government debt, treasuries, that market breaks like it did in England, the Fed's going to have to pivot. Because if you think that the Fed is Biden's not tickling Jerome Powell's ear and saying, what the heck are you doing? They're definitely doing that. So if you have a mortgage and you are able to refinance in like 2020, 2021 at like 3%, and inflation's at 5, 10, 15%, what an asset that is. It's just something to think about. Like at that point, your asset is the fact that you got this loan for so cheap, which is pretty incredible. But inflation keeps going up, and if it keeps costing more to build houses, how are the prices going to drop? If Fed admits this defeat, I do think you're going to see people's paychecks go up too. They won't keep up with inflation, but they'll go up significantly. So they'll be able to afford a bigger house. Anyways, let me know what you think. Do you think housing is going to fall through the floor? And if demand stays, or at least supply stays low and demand stays low, but the housing prices don't really change and people call for government intervention, do you think the government's stupid enough to do the kinds of things I just mentioned? I think so. Okay. All right, guys. I'll see you guys in the next one. Peace.